Hey everybody, Boris. Welcome to the weekly technicals for June 5 to June 9 of 2017. And of course, we're finishing up the week with very negative dollar news. The NFP numbers came in. Let me just pull them up for you. NFP numbers came in much weaker than expected, 138 actual. But the biggest problem with the non-farm payrolls or the U.S. labor numbers was that the average wages were actually very tepid. Came in at 2 as expected. Last month was downgraded to 2%. Nothing here signaling strong inflation, nothing here signaling strong demand. All of this is degrading U.S. interest rate expectations to at maximum 2 more hikes for 2017. That's quite different from the news that we had maybe even 3 or 4 weeks ago, where the market was absolutely convinced we're going to do 3 rate hikes as we go forward. So I think a huge amount of expectations getting pared back today, and that's having a big impact on a negative dollar. Next week, we don't have any serious dollar news. Literally only just unemployment claims and non-manufacturing PMI, which is going to be very anticlimactic because we've already seen the non-farm payrolls. So unless this is markedly better and somehow contradicts the payroll data, it's really going to have no impact on the dollar. In many ways, the dollar is really going to be the victim of whatever else is going on in the rest of the world, including the European monetary policy meeting on Thursday. We have Mario Draghi coming out on Thursday. It's going to be very interesting to see if he gives any kind of a hint that the ECB is really starting to think about tapering the QE. That would be very euro bullish, very dollar negative, because it would just continue to compress the interest rate differentials between the two regions. What's interesting is that over the last 2 or 3 months, we've seen a marked difference between the growth rates in Europe and the growth rates in the US. Clearly, Europe is starting to come back from the dead, while U.S. is really starting to slow markedly. That's going to attract more flow towards European assets. The DAX is already performing quite well. And if that dynamic continues for the next 2 or 3 months, which I think it might, we could see currency flows to the euro, irrespective of any of the interest rate flows. They'll just simply be on growth flows versus the U.S., which looks like to be slowing down on the growth side. Now, the other thing that's interesting next week, of course, is the UK story. The UK story is, to me, the primary story of this week, or this upcoming week, which is that we have UK elections coming up on the 8th, which were a slam dunk. Just a couple of weeks ago, everybody assumed that the Conservatives were going to win in a landslide. Now, the election looks like to be a toss-up. It's still, I think, if you're serious and if you're handicapping the election, it still appears very likely the Conservatives are going to win. But the bigger question is, are they going to win by enough of a margin? If their margin actually shrinks, that's going to be seen as a loss. It's going to make Theresa May even weaker as a Brexit negotiator. And imagine a situation here now where you have a weakened Theresa May coming into negotiations with Europeans who are seeing a resurgence in economic growth. That really puts UK in an incredibly awkward and very weak position at a table when they can't afford to be. So it should be very interesting. Unless we have a blowout win by the Tories, which appears to be increasingly more unlikely as Theresa May stumbles from one disaster to the next over the last week or so. Unless we have that surprise upside, cable really is the most vulnerable currency going into next week's trade, and we're going to be watching that very, very carefully. So let's just take a look at the numbers first, and then we'll get to the charts. So on the number side, euro is at this very, very key resistance of 113. We'll take a look at the charts as to why that's so important. Dollar yen looking very negative. As a matter of fact, from a technical point of view, I'm just going to get to the charts right now. It looks like it really wants to fill that gap, that post-Macron win gap at 109.50. And I'll be watching the charts very carefully for that move to the downside. And cable still holding that 130 level to the upside with support at 127, but very vulnerable to a shockingly bad result, which could then take it right back down to 125. Let's look at the charts, and we can see in pretty clear detail here how strong the euro is. The euro is just really ending up at multi-week highs here today. 112.77 as I close out the trade here in New York on a Friday. And if we zoom out a little bit, you can see that this is now very much at this very key resist 113 level. Now this is a very, very big resist level going all the way back to the September of 16. And a big flip actually against the ECB meeting in November. So overcoming this 13-14 handle is going to be quite a challenge. But if it does bust through here and completely, negates all of this long overhead resistance, it really opens up the run literally to 115, something so shockingly unseemable just a couple of weeks ago or even a couple of months ago where everybody was looking for parity. So it's not at all improbable that euro can still be on a path towards 115, but it really needs to clear this 113 with conviction into next week. Now, yen, on the other hand, is looking very weak. Let me zoom in on this and you'll see exactly what I mean. First of all, of course, we have a series of lower highs, but a couple of weeks ago, we sent a very strong sell signal here where we moved all the way from 114 down to 112, or like, 111. We consolidated, and today, if you look at it today, we're closing at the lows of the day here at around 110.45. 32 was the low of the day. That's a secondary, not as powerful, but a secondary sell signal that puts us on path towards filling this gap between 109 and 109.50, which would be very normal within a technical formation, very symmetric, that after we have a gap generally always gets filled. With the yen, this filling of the gap seems more and more probable next week, given the fact that U.S. yields are going to compress and the market is going to be much less positive about U.S. growth going forward. So I think that's going to be a very interesting story. But the most interesting story, of course, is this. Although cable itself is sort of a very low volatility trade today, kind of compressed, it's moved on one side by anti-dollar flows, by the other side on the concerns about UK election. It opens up, I think, a very serious possibility here if the UK election starts to go against May, of a test all the way through the 127s and possibly all the way down to the 125. Now, 125 was the breakout level when May first announced the elections. And you can see, again, almost like a yen move, a very symmetrical move all the way right back to where we started from, should the election prove to be a disappointment rather than a very strong victory. If we do get a strong victory, it's the retake of the 130. And then I think it's going to be most interesting is not just the retake of the 130, but will cable be able to hold the 130 even if May wins convincingly? That will be the very key tell of just how strong cable is right now. Looking at this technically and looking at the fundamental pictures, it feels like it's a sell the rally trade with some very ominous potential here to break to the downside should the news go against UK as we go forward. So the week, even though we don't have a lot of economic data, shapes up to be very interesting from every possible angle as we look for a fill down to the downside on the gap of dollar yen, a potential breakdown in pound dollar, and fresh news from the ECB that could put euro on a path towards 115. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.